I find that in markets where you can't short sell, for example, sell something you don't have,
Yes.
it's one way. So for example, real estate, you buy land with the hope that it will go up, and then you sell, and that's
Yes.
it. And so if the land doesn't go up in value, and perhaps it goes down in value, you're in trouble because you have to just hold it. It's just an example, might not be
Yes.
the best example, but when you're dealing in global markets, we have things like derivatives that you can sell what you don't have,
Yes.
and then buy when it's gone down, and you're selling because you can see it's going to go down. So whether markets move up or down, you know, we're able to find opportunities to then trade, which is really awesome. I like what you've shared. Okay, so for somebody sitting there and they're wondering, okay, this sounds interesting, but you've just told us people lose 80% on their forex trading.
Yes.
Huh? I bring my money, you lose 80.
Yeah.
How can I give you money? And how will you ensure that I continue to grow and compound my earnings?
Okay, the highlight was specifically on one asset class, which I like calling it contracts for difference rather than calling it online forex.
Okay.
Online forex is just one among the various asset classes that we invest in Oak Fund. If I may take you through there are local assets and there are the global assets. Some of the local assets, which we concentrate highly on, are very safe interest-bearing assets.
Okay.
Some of them include the government securities, that is treasury bills and treasury bonds. Then there is the cash and cash equivalents. Right now, we are running through a high interest rate regime, whereby we are having rates as high as between 14% to maybe extremes of 17%. So it's a good time to place money with banks before interest rates come down, or even use government securities to actually get that yield. Those are some of the safe assets. Also, we are able to invest in equities. That's the local NSE equities and derivatives. Further from that, now we go to the global markets. Global markets, CFD being one of the asset classes. We also have other derivatives, including options and futures that we are able to trade with. Further to these, we have what I'll call OTC trades. This is whereby we may trade specifically to exchange money for the purposes of trading other assets. Like now, if we want to trade CFDs, we need to fund the accounts in US dollars.
Yeah.
So we'll have to convert our Kenya shilling to dollars. However, as much as we are trading in dollars, we may realize that the Kenya shilling is gaining against the dollar. And we don't want to sell the dollars. We have to create a trade to mitigate the losses that are borne as the Kenya shilling gains against the dollar. So those are some of the things that we are doing as a trade now. How do we manage the risk, especially on CFDs? CFDs is highly leveraged with options to leverage up to 1 to 400 as at now in the Kenyan space.
Which is huge.
But now, how do you mitigate that? The best way is to take a very small allocation into CFDs. So what happens is majority of your portfolio may be on safe assets, then have a few part of the portion to boost your returns, so that if the worst happened, even if you are to lose, you know that the exposure is so little that even the interest-bearing instruments or any other safe assets will cushion you and at least bring you to break even.
Yeah.
Yes.
And I mean, I'm imagining doing that for myself, and my head is spinning because it's just hard. Between children,
Yes.
homework, work, emails, and all the other responsibilities we have.
True.
It's just very challenging to manage your own portfolio. And so it would be great to then allocate some money
Yes.
towards, a special fund where somebody else is managing, thinking for you, and so on. When you looked for the team that we now have,
Yes.
particularly the traders, what are some of the qualities that you are looking for?
Okay, majority of them is first, past experience in trading. Past experience in trading is key, but most of all is a corporate culture. I have noticed with concern that there are very many people who will claim they are traders, especially CFD traders, but they've not worked in a corporate. They don't understand someone overseeing or managing how they operate. So that is key to us. The other thing is ability to learn and adapt, because as much as we have various asset classes, and as the fund grows, we need people, as much as they may specialize in one asset class, they also need to help in one or two other asset classes. Someone who can accommodate learning new experiences and being able to adapt to the various opportunities in trading that they can really fits into our role.
Yeah.
Yes.
So let's talk about risk for a moment, because a lot of times in my experience, people always focus on returns.
Yes.
They're always like, yeah, how much will I get? Oh, fantastic. You know, that one is more than this other one. And they don't investigate the issues around risk. So for the Oak Special Fund specifically, what are some of the risk management systems and structures, controls that we've ensured, or you've ensured are put in place to mitigate massive losses, and to ensure that, we have sort of steady growth of people's investments rather than, having a very volatile scenario?
Okay. First, I'll start, rather than internal, I'll start from the top, the regulation. From the regulation point of view, and I prefer seeing it as clear as it should be, and it's also on account onboarding documents. Special funds have a risk. They carry a risk. Yeah. And clients can lose their money. But per the regulation and Capital Markets Authority, we are not supposed to lose more than 10% of the portfolio in a single day, and a maximum of 25% in entirety. Anything beyond that will be going against the regulation. That is number one. Number two, drilling it down now to Faida. What are the structures in place? At the top, we have the board and the management. Below that, we have what we call an investment committee. An investment committee oversees the investment strategy for a period. It meets frequently. I won't disclose that for internal purposes. However, they are able to say that this is the allocation matrix, whereby for each asset class, this is the maximum you should place in this asset class. And 0 is always okay, but you can't go beyond this. Anything beyond this must get approval by the investment committee. And the investment committee, which is chaired by a chair who does not sit in global markets, reports directly to the board in case of anything. That is the second layer of what happens. If we drill further down, we'll go to the dealers. The dealers have what we call dealer limits. So there's a dealer, each individual dealer has their own limits, and also as a floor, the dealing room has its own limits. So there is the stop loss limit, win to loss ratio. There is what the total exposure in a certain asset class, and how much you can go, you can expose the fund to. This is also defined at investment committee level, but broken down in smaller parts so that even each individual dealer knows how much can they risk and how much they can't risk. To go further into it, we have a dotted line to what we call internal audit. Internal audit are supposed to oversee what is happening in the dealing room. The limits are they adhered to, and they work hand in hand with back office so that they are able to monitor on a daily basis what is happening. The last layer is external audit, which is able to come periodically, look at everything that we are doing, and to ensure that we are both under regulation and also our internal controls are in place.